começar com as perguntas até.
I will start with the questions just to make a warm-up. Carlos, Cristina, what about the capacity of satellite store owners to pay the rent, the leasing spread, and percentage of occupation costs of satellite stores? Many store owners complain. How do you see that dynamic and how that fits into the growing or the growth plan? And what about the potential changing mix, increasing services, restaurants? How do you see that for your current projects and for the tech mix you have in your projects that are so successful? Thank you. Thank you, Zé Ralph. First of all, we have not shown the occupation graph. Iguatemi traditionally has had the dominating shopping malls, but we have an occupation of 10-11%, one of the lowest of the sector. This has been a concern of ours because even in moments, as we have seen in the last decade, when Brazil grew a lot and people look at growth and not at costs, I always had the perception that we should look at the both points. We have to look at the development and the growth and costs. We have always maintained 10-11%, even if we have a higher level. Services, if you look at any line, any imaginary line of operations, security, Iguatemi is going to have the best quality in all that, delivering with competitive costs. I think that we have lower growth now, and store owners are going to be pressed by costs that grow in everywhere, including in ours, and there's going to be more concern. The secret is to have studied in the past and have focused on having dominating enterprises like Sorocaba. As Chris has said, we had 2 shoppings apart from ours, and there was no difficulty to commercialize. We commercialized 100% of the area. We started with 80% because people are entering now. We always have this obligation to take innovation. So you have several brands that were not present there, and they have a development plan. And they don't start immediately, but they will enter 6 months or 1 year later. There's an expression that I like, which is flight quality. When things are rough, you stay where you have results, where you have sales. So if you have an adequate cost, you maintain yourself. So even if there is pressure, we are strong in that point to suffer just a little. Last year we saw that. We have 30 years of experiences. We had lots of problems in the past. We have experience. We have experience to work as we did in the last decade and in the future. In terms of stores, it's important for us to innovate, to create dynamics, and that brings new content. New content in the past. There were many things happening in Brazil we were able to perceive before the others, and we brought it to our business. Clearly, this has happened outside in. We have international operations. As we've said, Brazil grew a lot. We have 120,000 or million consumers. It attracted the different markets, not only niche markets. We were the first to bring novelties. JK was a perception of that. Of course, the bargaining power of those companies is larger. They have more knowledge of the market as a whole. But even if we have, in some cases, a negotiation where a minimum rate rental is lower, it's higher in general than what we have practiced in the same area. So we always have to look at this composition. We want to bring what's going to work in the country, and even if we have a different composition between the minimum and the variable rent, the total rent is going to be higher, so growth will happen. We have figures of some activities, and we, if we're going to follow with this dynamic and we're going to strengthen new shoppings. I feel at peace in relation to that. I think it's productive and interesting to have a novelty with all those brands that are coming in. So we will deliver new things, and new sales mean good, better rentals for us. Thank you. Do you have any questions from the audience? Well, I have another question. When I went to the JK, I saw the food area full and the stores are a little bit empty. We have a case of JK. JK for us is a huge case in several aspects. First, Iguatemi is a 30-year-old company. We have been in the market for a long time, and Iguatemi São Paulo was the best known. Lots of people said, look, the company has started with this business. Obviously, they have this big footprints. They have low threat of entries or new entrants. When we proposed the JK project, they said, how can you make it feasible? It's so close to Iguatemi. How can you make this commercialization? Obviously, as we are in the market as anyone else, when you know the business, and you should know what are the fundamentals that make it work. We knew that there was a bigger demand than we were able to offer in the limited space of Iguatemi, and the demand was growing year by year due to the growth of the country and the brands. JK was almost an extension of Iguatemi. We have 80,000 square meters in the most important region of the country, and we work this in favor of the company. We enable new brands to be there, and we can make the rollout of those operations in our other projects. JK for us was not only an innovation of content, it was also an innovation of design. We know several areas to make different things. It's a very innovative project in design. We have open areas, we have the glass walls, so we have this deep perception of space. And we were praised by companies that have shoppings and stores in the whole world, and they think this is one of the best projects in the world, one of the 5 most important enterprises. And in terms of content, we brought 50 brands that were not present in Brazil. We wanted to bring them at the same time, to present the market, to work with NPNL, to show them the importance of being here, the perspective of growth in the project and in our network. All that worked well, and the result is there. We are among one of the 3 or 4 better incomes by square meters in sales. It's growing significantly. Those brands of the ground floor that you will not bring thousands of people in there because the average ticket is higher. When you look at one of those stores, such as Goiás, they will sell most of it out of the country by phone. But those are brands that will sell 8 or 10,000 reais a square meter. So stores that have 100 or 120 square meters have an incredible income. So this is a different way to look at it. There are several ways to sell. It's not only the client in the store, people who call and have the products delivered and pay through the internet. The sales per square meters is really impressive. That's why operations such as Prada that enter at JK and now has the new store in Iguatemi. So these operations are working, are selling in Brazil and give great results.
In the specific case of JK, It's important. All our projects, as Mario said, we have opportunities to grow in different segments. They have the capacity to look not only the shopping center as something isolated, but within a larger scenario that create a captive and relevant market. If you get our case, you have one tower operating, it's Santander. You have three coming into operation. Two are in operation, but they are being used this year. And we have Dajlu and the Camargo Correia in this neighborhood. We are talking about 25,000 people in the vicinity. So this gives a very good average of growth in the short and medium term. Thank you. Any other question from the audience? Well, if you can talk about outlet strategy and why this market at this moment, how you see the positioning, it's becoming a division in the company. What's the size this division may have in the whole of Iguatemi? Well, we are focusing on premium outlet to optimize on our customer base. When we looked the first premium outlet in Novo Hamburgo City, we are looking the same base customers base, Nike, Lely, all they are saying at a discount of 70% in some of these operations. So we are looking at the same customer base. We are trying to increase our relationship with those customers and go into a segment that it's a trend worldwide. It's a trend online trade and also premium outlets. We saw there is a potential for growth in Brazil for this segment, talking with our customer base and the discussion we held over the last few years, they grow a lot. Not only grow in Brazil, in São Paulo, but also in Brazil. They grow their installed base. The sourcing is more focused outside than inside. So the leftover of stock is much higher. Some of these operations are going into the distribution segment, trying to produce part of this for a discount retail, a certain line of products. Some brands are doing this. And this created an interesting offer to match the demand, which was the interest of people to buy at a discount. We were discussing and analyzed this. We want to have a pilot project in an area where we have an important presence. Rio Grande do Sul state was very important for us. As everything we do, we had a plan. We started with one. Now we have three. We have one in Tijuca, Santa Catarina, and Nova Lima in Belo Horizonte within the same geographic strategy. And the idea is to grow, to have a different line of growth. This is one of the strategies mentioned here. We have an organic growth, we have acquisition, expansions, a mixed projects, acquisition of participation and others. And now we have this new avenue for growth. We have a huge opportunity. It's smaller than shopping centers in Brazil. Brazil, we can, according to our mapping, will have 30 or 40 premium outlets. So who starts first will occupy this space, as we did with shopping center many, many years ago, especially on the relevant markets. But we'll have 10 to 15% of our business, not more than this. This will give us comfort and confidence to grow without impacting the other segments. The idea is to work with different structures as we have other companies operating with premium. We have the support area is transversal, like legal department, relationship with customers, marketing. But we have a working philosophy, operations, development of new business that is quite peculiar. That's why we are deciding to separate these operations. Well, thank you, Carlos. Thank you, Cristina. Now we'll have a coffee break and Gilson will take it over. So we have a 15 minutes break. 11:30, we'll be back. Thank you very much. Well, good morning. I will start in a different way. I will introduce CEDIP's employee. If you have any question afterwards, you can ask them. Willy George, he's the new CFO. We have three people from CEDIP: Willy Jordan, CFO, Bernard, our investors relation managers, and Half, who helped me a lot. He was director of investors relation. He's well educated about CETIP. I would like to thank his contribution and invitation to be part of this event. I'll talk about CETIP differently from the other companies. It is a B2B company. I don't know if we still use this term, but it's a company that do not work with end consumers, so we are not knowledgeable. We are not known in I will introduce the business, our areas of work, CETIP for beginners, and then I will talk about our projects. So this is the agenda to show what CETIP as a history, the business environment, what impacts, which are the drivers that support the future growth of the company. I will talk about numbers speak for themselves, and I'll talk about opportunities for growth. I will try to abide by the agenda. It's important to show CHP was created with CD in the 80s. It's a criticism that the market used to do in the beginning of at the end of the 80s and beginning of the 90s, if our supervisor, our banking supervisor, was not exaggerating by creating CETIP. CETIP was born as a central for private papers. It started operating 86, 88. It did an agreement with the National Association of Financial Market Institution, fixed income in its DNA. In the mid 90s, its registers out of the counter derivatives. Our regulator, the central bank, was required that everything that was done in the derivative markets to be registered in a chamber. CETIP started by doing this. It's operated along many years, and it went through different process with like stock exchange, BMF, Bovespa in the end of 2008, in beginning of 2009. It was disconnected. It was like a back office of banks, an extension of banks and brokerage houses. It was a service centers to abide by the legislation. So there's no objective or of being profitable and to meet regulating agencies in what the financial market consider an excess of bureaucracy and lately is being perceived by international regulators as a model of financial institutions in Brazil. Myself, as a user, I was part of this first derivative operators in Brazil when I worked with Citibank. And we believed there was lots of bureaucracy in things that were done in the over-the-counter market. There was no control in the self-regulation, but the comp went through this process. It was led by Advent, but 32% of some of the banks. To capitalize in this project, it was listed in the new market. In the end of 2010, CETIP bought a company called CRV that we call financing unit in the company, and I'll show what it does. In 2008, Advent sell its partners, its holding in CETIP. In the IPO, so the last share to ICE. ICE is an exchange that started operating last decade with the breach of EMRO. It was created to be a commodities and energy exchange. So, and today it bought NICE and is one of the big exchange operators in the world and the largest partner of CETIP. My contact with CETIP dates back from 2011. I worked for 21 years in banks, and over the last 7 months, as I'm the CEO of this company. In 2011, as director of Santander, I was appointed to the board of director. As a board member, I was more interested and I was invited to become the CEO of the company last year. So during the IPO, this was the composition, the shareholding composition. Banks were the major shareholders of CETIP, Santander, Bradesco, Itaú, Advent, who went from 14% during the IPO in October. Federator was a big international player and shareholder, had more than this participation. And it's a pulverized market, especially with foreign investors. Very few domestic investors. Today, banks do not have a position at CETIP, so it's really a corporation. It has a Pars one pill of the banks are not the shareholders. The largest individual shareholder is ICE with 12%, and the other shareholders have a more balance between foreign investors and domestic investors. But with the prevalence of foreign investors, performance is really great. The shares is growing almost to 28. I was discussing with shareholders, and performance since IPO was very good. Although over the last 2 years, performance was very sideways. And I'll explain this along my presentation. I will explain why this happened. I will first explain what's CETIP. When our salesperson goes to companies, the secretary usually asks, "What's CETIP?" CETIP, it's a depository of papers private papers. It's the largest private access exchange in the country. We offer a complete solution for issuers of debt. We do analysis, pre-analysis, and pre-registration of debentures. We do risk management and sales of market data for banks to manage their products and commercial areas. Moreover, the financial segment provides the authorization, the financial restriction of a unique data bank for the financing of cars in Brazil. It's a B2B company whose large shareholders are financial institutions, investment funds, pension plans, insurance companies, corporations. We have financial institution as partners. We have clear streams for those who operated grades in the 90s. It bought down in the past. Maybe I'm too old in this market, but a clear stream part of Deutsche Börse bought Cedel, Euroclear, who is still active, and in the Euro, these two players, and the USDTCC, they do similar products because it was not mandatory to register over-the-counter debentures. So this is just to explain the company. We decided to diversify. We 2/3 of our edge comes from paper area, CETIP, which is more traditional, and one-third of the financial department. In the paper unit, where products are more known, we have custody of fixed income uh, bonds, monthly use by turnover and fees payment for funds and activities 15%, registration of operations, fixed income operations, LCI, CDB, everything that is connected with fixed income. It's 10.5%. Other revenues 10. SIP, SECHIP processes today all TDs of the country. So the message between banks and compensation is done at SECHIP. So people do not know, is not aware of this activity. In terms of financing, product has its own acronyms. I will try to explain. SNG, which is the national system of gravames. It's a financial restriction for the cars financing. And an area that is growing is market data and solutions, which are activities inherent to the cars financing process and sales of market information for banks and financial companies to leverage their activities. I included this slide to explain SNG and SECOF, but just to say this is the last known activity of CETIP. People do not is not aware that CETIP also rendered this kind of service. And to put into context what we are going to talk about, growth, to be a player in the real estate market. Today we complain about bureaucracy in the company, but cars financing market is really efficient. You can buy a car on Sunday, and Monday you receive the documents, the car is fully paid, you have it is very, very easy. There's no possibility of a double registration of the same car, which was a common practice in the 90s. So CETIP is not involved on the first stage as when we are discussing and negotiating the car with the dealer and the consumer, but we render a service to banks. We get all this information, this financial institution, we reform, we record this in the car and deliver. This is a product, and we deliver this information to the different DETRANs. So CETIP has the connection with this DETRANs and the financial market, all the banks. So CETIP is a go-between between these two parts. It's a unique base. It has national reach, so you have a safe system. CETIP was selected by bank to process this. If you pulverize this information, you lose the control, and therefore you do not have a trustworthy base to operate this segment. Just to put into context the financing unit, and then I will talk about the projects we have in this area. I'll try to go briefly to cover everything. Because I'm not a consumer's good company, it's more difficult to use my 40 minutes to explain the company and talk about our business. Drivers, how CETIP grows. So I included the drivers that help the company to grow. One of the drivers is credit market. We've seen that credit market in Brazil grow uh, significantly. On the bottom line, we see 60% of the GDP based on the financing to consumption goods. We have huge investments in infrastructure, but CETIP can grow in this scenario in a very robust way. This is one of the drivers of growth of company. This is the credit growth. Even with a halt in this growth, or a decrease in its nominal growth, we can deliver a similar growth in the company. The market is not developed in Brazil, but is one of the growth drivers is the local capital markets, the development of the capital markets in Brazil. This is one of the drivers of growth for the company. It's very limited if we compare with capital markets abroad.
And it's more rare to have a company that has a debenture. It has become more frequent, but even investors buying, a physical person buying credit risks, private credit risks, not only because nominal interests were always high, but the policies of zero risks. When you buy the public bond with the daily liquidation with high interest, never enables this market to grow. I think this is a no return path. To deliver the expected growth, we will lack money. Companies will have to have the support of the local capital market, and this is a driver for the company to grow. This is already significant in our results. We see number of emissions, new emissions. This is a growing line that will continue to expand even with this period we are going through with higher interest rates. Many of the investors have already perceived that they must have this appetite for credits in the private indebtedness, and also the access of the local market will increase. The point out of the curve in 2012, we have some emissions from leasing companies, banks. There was an arbitrage to use an emission window of debentures of leasing in 2012. Banks accelerated because the legislation was going to change and they wanted to have debentures to make the RIP in a cheaper manner. As I said, this is the credit market, capital market. When we talk about financing of cars, it's interesting. We have stagnated around 17 and 18 millions in car sales as a whole in the country. The blue line shows that 37% of these vehicles are financed out of the total number. But this is interesting to understand how that affects CETIP. New vehicles, 5,000 roughly, or 5 million rather, 5.5 million out of a total of 18 represent a smaller share of used than used cars. We perceive that in the deacceleration of financed cars, it went from the apex to in 2010, or this huge growth from 14 to 16, 47% of the cars were financed, and today only 37. It's interesting to see the impact of that for the company. Of new cars, we are hitting the bottom. 64% of the new cars are financed. And the most important for CETIP, the used cars, that dropped a lot, more than 2.5 times. The figure went from 36 to 25. This hurt more than that. And here we have what we expect to be the inflection point or the turning point of this market for us. We are exposed to sales of used cars and new cars. As a whole, this is the market. As you have followed, in 2012 and 10 and 11, there was a bubble in the market. Those who work with banks saw the growth of default going from 3.5 to 7. The credit euphoria. Now we're going back to normality. So this is a growth drive for the company, car financing. We hope that 12 and 14 will not be that good, but, or expect that it's not going to be that good. But in a couple of years, this is going to hit the bottom and we have a potential growth that's still very significant. Talking about the performance of the company, as I've said before, the figures are really strong. The company has net sales higher than a billion, 17% growth. We would like to highlight that in the last couple of years, the delivery of results and the traditional growth was stronger than the financing unit because of the graph I've shown you of car financing. Therefore, in 2011, we had almost a slight balance, much more in bonds, but today we perceive the difference. Bonds units has two-thirds of the business and financing one-third of the business, but it shows potential growth. Both units last year delivered growth by two digits, more than 15% in both businesses, even in a tighter market. We are working on new income sources around vehicles to get closer to the banks and gain in operations and gain efficiency in the operation. It's not only to supply the service, but also the service around the business of car financing. Again, margins of the company exceptional, 71% net profit due to the unleveraging caused by the acquisitions. The growth of net profit was also related to that. We have a 55% margin. This is a jewel in terms of results delivery and cash generation. We grew more in our expenses due to some isolated expenses, but the trend is to look for growth by two digits and to grow expenses accordingly. We should adapt our operation in different states and different products. As I've said, strong cash generation. The company has increased payout due to the smaller net debt, due to leverage for the acquisition of GRV. EBITDA went up threefold, and it's almost paid. We have 0.4 of the EBITDA for a company that generates 500 million reais of cash. That's why we also increased the payout. In 2013, the company distributed 75% of its net profit. This is my focus now, more exciting. I'm still in time. Where is the company heading? Where do we have opportunities to grow? I'm going to mention the units, so you have an idea of what are the projects of CETIP. First project I would like to mention is the Trader plus IceLink, which is a tool for fixed assets trading. This is a platform for electronic trading of assets, fixed income, public bonds, and private bonds. This is a market that's very important for us, fixed income, private fixed income, because we make money in every phase of the process. When we issue, when we register, we have the custody of the debenture in the payment of interest, and the investor that also has the custody of that debenture registers that negotiation. So we want to be a player that will follow the growth of the capital market. Our ambition is to be the platform chosen by the markets to negotiate public bonds and private bonds. We have a huge effort to give visibility. Everybody wants transparency, compliance areas from banks, institutional investors. We provide the platform for free for the markets to enable the markets to grow, and we offer services of middle office, the ICE Link, which are post-trading tools that will make back office easier for clients. This is the strategy to be consolidated as a trading tool to offer post-trading services. So at the end of the day, you may calculate the quota, you may divide private bonds or debentures among the funds that are being allocated. This is already running. This is a project that's part of the consolidation strategy. Chip Connect is the operational efficiency of connection with the banks to make banks' life easier and to avoid rework. Banks have to register some assets or fixed assets, LCE, debentures, LCA, and there is getting the information, sending it. We have a tool of IT that makes life easier so that they get the information or we provide the information and the bank packages it and sends a statement to each one. We also send statements. We are reviewing that to adequate to the new CVM instructions, the Brazilian SEC. But we want to make the bank lives easier with the diversification of fixed assets. And Tip Connecta is not a product. It's a product that generates operational efficiency for the bank. And it's not really something required, but it's a manner to make banks loyal to the CETIP as a depository. The Certifica is a seal that ensures the investor. We have the expansion of boutiques, of financial supermarkets. We're going to help the financial supermarkets, not only XP, but all the brokers or the brokerage companies that have initiatives of distributing to the clients diversification of income sources, diversification of distribution of assets. So they're not going to live only on sales of shares, but also fixed income. We have a seal that ensures that that financial asset that you bought from your bank, your broker, your financial agent is registered at CETIP. We have in Brazil the guarantor fund. It's 250,000 reais, and we have the incentives that the regulator and the government wants to give so that you don't have a bank concentration. Because the medium banks have to diversify their funds and their sources, and sometimes they do not reach retail. The CETIP Certifica will help the market diversify sources and will reach retail. We are able to give that seal that that asset exists, and if there is any problem, you will have a register at CETIP. In the last years, we've seen problems where there was no register effectively done by CPF with CETIP. So this is certainty or insurance for clients in fixed assets distribution. A project that I am very excited about is COE, COE, which is a tool that mixes derivatives and fixed income. It's been regulated recently on January 6. The platform was registered and banks are selling it. All of them are working in that direction. Banks have registered COIs with us. The volume is still small in those 2.5 months, 1.5 billion of businesses or financial volume in 4,500 operations. But this is the business of structured notes. It's fantastic that may combine fixed income with any asset betting on highs and lows with compositions abroad. It's really well accepted both for retail, for private and institutional. The banks are making an effort. We're helping Previc, Abrap, because given the diversity of assets that institutionals have, and they also have the interest to invest abroad, COI is a way to give your money here, but to be exposed to international assets. This is going to be in the agenda of every bank manager, retail, private, and institutional distribution. This is a product that CETIP, as I joke with Carlos Rato, he's the father of this project. He said, Gilson, you will see that this is going to be born in 6 months. As a client, I don't believe in that, but our regulators don't want that project to take off. But it did. It was a good surprise at the beginning of the year. It's an extremely interesting tool. It may be used in a very useful manner for the whole market. CETIP Trader Captação, it's a partnership we have with BBC to provide channels to capture financial assets, CDBs, letters of change, so that the medium banks or big banks may diversify their bases through distributors. This is a platform where the bank sets the prices, distributors go there and collect the prices to distribute to clients, to their physical person clients or individual clients, and the register goes directly to CETIP with the certificate seal and to the to back office. The last project, a more technical, CETIP always is asked, is CETIP becoming an exchange, a stock exchange? No, it's not. We're going to take the first step to be a central counterpart. This is a big project of the company. The company has to become a central counterpart, not become a stock exchange, but the international regulation demands that some derivatives and some operations are registered in relation to a central counterpart. So we must have the ability to become a clearing of fixed income. So we are working in the project to have the registers of swaps with guarantee and derivatives are in the first set of products we want to create, and loans of bonds we want to consolidate in the private fixed income market. That doesn't mean that we're going to become a stock exchange. It's a first step to enter in the world of central counterparty. CETIP will become a financial notary soon. Any register of guarantee of financial assets may be conducted at CETIP. This is not a project because we already have the product. It has existed for 2 years, but we hope this is going to mean income for that unit. And financial units. CETIP has this payment info. We have software that receives the information from the car that's going to be financed. We run an intelligence to facilitate the life of the banks and to make decisions agile, to approve or not the financing by the bank. So we receive the information, we cross that with our criteria and the criteria from the bank for car financing. This is a car XY with accessories or not. So we have a range from the bank, and if the price is accordingly to the year, to the model, if the car has fines or not, if there's any criteria that makes sense in terms of approvals, so that the bank will approve or not. So what is the upside of the tool? bank automatizes the process. It's an intelligent software that makes 70% of approvals automatic, so the bank will dedicate attention to the cases where there might be doubts or interference from an employee to evaluate if it makes sense or not to finance that car.
This product already exists, is implemented in two banks, and we want to implement and introduce into other banks. Two big financing companies use this, but we want to increase our customers' base, market data. It's growing a lot. It is to work the data bank CTP has. I'll give an example of a product we have. The bank calls us and say, my commercial area says I'm the first car financer here in this neighborhood. I have a market share of 15, and I show he ranks fourth with 5% of market share. So transparency, you have lots to improve. So this is just an example. Market share, credit quote, if the bank is the first, second, or third to be considered by that car dealer. So you have more information for the bank and companies to work their marketing strategy. Electronic formalization, we are still implementing. It's very, very interesting, but there's an army of people that will insert the contracts. Once you decide to buy a car, the dealer calls to the banks formalizing and say, comes here urgently. Gilson wants to buy a car, and if you don't be, if you are not here in half an hour, he'll leave. So he goes there, checks if Gilson is Gilson himself, if the car is okay, and then he approves if that thing is correct or not. Our project here is to have through a smartphone you can take a picture of the person, the car, the driving license, and we can check that document belongs to Gilson. That car is the car. They are saying accessories. The picture matches with the car, so we approve for the bank during the formal approval without the intervention of human, without any human intervention. And to finalize two big areas which I dare say are the most challenging projects for CETIP. They are basically to copy or to the real estate credit what CETIP represents for car financing. So this is the big leap we want for CETIP. And also helping all of us who suffer a lot when we want to buy real estate property. It takes 60 days to have the financing approved. So we want to speed up this process and reduce this period from 2 months to 15 days. I won't go into detail, but we want to be a go-between a bank and notary office, sending information to the central bank by law. This is mandatory. As we do with the car industry, we are connected with the banks, with the local detents, and we send information to the central bank. People, those who understand, we believe we have this DNA, and we want to make life easier between banks, notary offices, and the central bank. We have already a product, an assessment software. When a financing request comes when you receive this, you can evaluate the process. If we add with this ambition to have this registration of this property, will speed up the sales of this product. We are already working with one bank, and we are planning to have a partnership with another one. Now, and the last one is insurance. We want to increase our service offer for the insurance market. So investment thesis, I will we want to go to credit and fixed income market. It's a resilient market, integrated vertically, cash generation that is very strong, low risk of implementation, low capex. and a big yield and growth. That's it. I need to be fast, not to be because I'm not a retail company, but I hope to have been helpful to help you understand companies like ours. We can open for Q&A. We are short of time. Alberto has an airplane to take. I would like to thank your presence and the work, beautiful work you are doing ahead of CCP. Short of time, so I have the easy part to do this roundtable in 30 minutes. I'll invite our guest. I would like to invite Alberto Zoffman from Itaú. He's the global head for project finance. I would like to invite also Alessandro Levi from Grupo Arteris. Julio Fontana won't be able to participate today, but we have the presence of Nutsu. He understands as much or more of harbors and railroads as Levi and Marcelo Guidotti from Eco Rodovias. Well, we had prepared an introduction with more sophisticated questions, but we have no time for this. I would like to do a disclaimer. Alberto and Nutsu are with a complicated agenda, so feel free if you need to leave before the end of the session. Well, the first topic, the funding part, we want to understand how you see funding via private banks in terms of cost, deadline, guarantees. If there is today, if you are discussing with the government any measure to create alternative instruments to increase the share, the as was the case of infrastructure. I think Alberto Alessandro can comment on this first question. Good afternoon. Thank you for the invitation. I would like to thank the presence of all panelists. You are all our customers and clients to talk about funding. Well, you're following up. BNDES is opening space for private banks on a transfer for logistics sectors. And this is a practice that should be adopted to other sectors. This is happening in the energy sector. We are asking BNDES to increase the participation of private banking for this project. This is one line of things we are doing. Costs, total cost, including fees and the cost of funding deadlines. This is in compliance with the operational policies of BNDES for each sector. And I won't go into detail because each sector has a different characteristic. In the capital market sectors, you're looking the evolution of infrastructure debenture. This market has a huge potential for growth as debentures are very few. It has to do with maturity of projects. It's similar everywhere in the world when projects are on the initial stage that we call completion. Physical and financial completion of the project is more complex to make the sale of this debenture pegged to the market is not prepared to study and understand the risks involved and to run the risks, especially physical person market as these projects gain maturity. When they get close to the stage of stability, this market will grow. We did recently an issuance of a third thermoelectric company that was, in this case, the plant is ready, operational, is still pending some conditions for completion. We made operations with arterias, with eco-rodovias. So there is a series of successful mature projects. In terms of banking funds, what we are discussing with the government is that we are giving some suggestions, some of them quite polemic, which is the use of compulsory instrument. It's not easy to talk with this. Savings funding can be an alternative banks have, and savings raising. One of the alternatives is to use these resources for this goal. We have other ideas to create programs like what we are doing for ProEx for exports. We can create a program to equalize rates for infrastructure. So we are talking about many of these ideas with the government. In terms of deadlines and rates, we are interested in having top quality assets in the long run. We have a portfolio of 10 billion reais in the financing of projects. This proves we have the appetite. We have active participation in the uh, payment of the airport, electric sectors, and these areas we have a great knowledge. We are rendering consultant services and others. We helped a lot, like was the case of the airport. When we talk about our balance or our funding, not using BNDES or market funding, what we see are operations that have a 10, 12 years maturity, market operations which are public. We see remuneration around PSA, around 7 to 9, a ballpark to for the sake of comparison, and guarantees, the typical ones for projects. We have two stages. The phase of pre-completion, we have a series of issues to be discussed, but during operation stage, guarantees are typical to project finance, shares of the company, receivables, emerging rights of that grant, or any relevant contract for that project. We understand, our understanding is quite similar, the issue of funding in Brazil, especially long-term funding. We at Arteris, the major point of our growth structure is how to get long-term funding, not including BNDES. We went through a process that started September last year, where we start to work with mature uh, highways. We have rates for 5 years rate, depending on the time of the grant. In the case of Intervias, concessionaire with a huge cash flow. Uh, we have the concession up to 2028, and we decided to have a short-term financing. For us, the challenge is to how to get financing in the market for Ecovias, a company 100% mature in the long term. We are asking this question to seek funding in less conventional structures than the one the market is willing to pay. Another point that for us is very important is banks and the market still need, in our point of view, to grow or developed its understanding of these long-term flows. BNDES is the single and greater partner in the long-term funding. We have lots of active projects for recomposition of funding due to contracts details. We are doing some works in the federal roads, less mature roads, in terms of heavy construction that require more financing from BNDES. To migrate this, when we talk with BNDES, we have a strong intention on the part of BNDES to include, to a certain extent, infrastructure debentures. So BNDES is working towards this goal, and all that our discussions with BNDES include a share of infrastructure debentures, but all of them will be bought by BNDES itself. As we can see, it's very easy to finance autovias, but it's more difficult to finance a concessionary like Planalto Sul with a debt of 7 times EBITDA. BNDES is the sole agency that can understand and meet the requirements of these projects. In terms of costs, we we have this problem with a minimum level of risk, but we understand interest should be around PCA plus 7 and 9. In our concessions, we have some signs within this range. When we talk about infrastructure project, this funding still is a very expensive funding. If we look the last auctions that occurred last years, the profitability are around or at par or around 8 to 10% real. This with a funding with a cost of PCA plus 8 or 9. So this is not a such important leverage. So this cost challenges, market challenges, understanding of the market for us is the big challenge for the development of our infrastructure. This is more or less what I had to say. Going to a second point, harbors. We have in this context, in the new harbors law, which are the opportunities in the new bids and the concessions that you already involved. Which are perspectives you have in terms of timing, processes, risks involved? Uh, Good afternoon. The new harbors law, which was expected, harbor sector was left aside media's the headlines. This is not a glamorous sector, became over the last few years very, very glamorous. We can read every day headlines on newspapers about harbors. This was an ample discussion. We opened the possibility, still polemic one, in relation to some of private and public terminals, but we open an area for new investments, both private and public harbors that try to innovate and increase investments. From the point of view of Eco Rodovia, our assets, for us, today we operate Eco Harbor in Santos on the right bank of Santos Harbor. We are especially interested in STC-10, and we are waiting this to go into bid. My expectation is that the business is quite complicated. because we have harbor licenses that was issued before the law of 93 and some after the law, so the issue is quite polemic, but I believe this year we won't have much novelties more than TC10 and the two we are waiting. I think things will be delayed, but they will be successful. The same applied to airport railroads. The government wants to do a huge investment in this segment. Maybe we won't have them this year, but they will come in time. This is a very sensitive topic. We are always talking about a new law. New law. What's good is old law, something that is stable, is like a legal framework that comes forever. These new laws, the financial markets, if you have an old law, helps the financial markets to understand the rules, establish it cash flow, and favor positive leverage, increasing investments. The law 8630, which was implemented in 83, caused a huge revolution because it established some rules that were in line to privatize harbors. The great participation of ports operated by Docas Company, and this was a lack of reference. We did not need a new law. So it was important this new law caused the revolution, which was privatization of harbor. This new law is not revolutionary, it's just a new law. And this, to a certain extent, creates uncertainties and halts investments. You are giving a step back because what's relevant is the need we have today in the country for infrastructure in general. This is rare in a country with the level of development of Brazil. We have lots of problems in terms of development, like security and so forth. But when you look and see the level of economic activity in Brazil, and if you compare with countries with similar infrastructure, it's quite incredible. If you go to the North Hemisphere between Asia, Americas, and Europe, you see the level of infrastructure and services that are completely different from ours. We have in Brazil a huge opportunity to make investments that have low risk. The market risk is very low because you have compressed demand. You do not need the support of the government. This is quite positive. So, in general, infrastructure is subsidized everywhere in the world. Brazil lacks so much infrastructure that we do not need the support of the government. If Therefore, we need almost nothing to speed up this process. I see Brazil has more capacity to make these investments. A good example is Santos, that has a railroad infrastructure. You have a short distance from a big urban center, which concentrates a great part of production and cargoes. But you have other parts of the country that lack this minimum infrastructure. And these places will receive support from the government. We can do an infrastructure ahead of the market, but markets like Santos, Rio de Janeiro, Paranaguá, Vitória, these areas have a repressed demand, and investments will occur and they will be profitable. I have no doubt about this. We have many, many projects to be implemented. The projects will be implemented not at par with the increase of demand. So I don't know what's the focus of your question. If you want to have an approach, well, Talking about competitive environment that you mentioned about the public harbors and private terminals, how do you see competition? Of course, you have each one has its pros and cons. You have the possibility of doing a brownfield in the future. How do you see this competitive environment, especially commodities? We are talking about the north route. People are investing to the north. And if Marcelo can talk about containers, competition, organized harbor versus private terminals. North route will occur. I always say that Brazil has something that's quite incredible. There is a geographic disparity. You have a mountain range that go from Espírito Santo to south. So all rivers run to the interior. Pinheiros goes into the sea in Buenos Aires. So you do not have hydroways or riverways in Brazil. And Brazil developed and grew in the south. So you have in Brazil a huge limitation in terms of delivery of commodities, and therefore we need an efficient railway system. We have some efficient and non-efficient railways, but when we talk about the North System, this hydro way of the Amazons. It's quite efficient. You come from Panama and you cross the river 2,000 kilometers over the Panama River. What you have there is that the regional level of development is very low. So you have time to mature this market. And you still have a compressed demand that is huge in the south.
And that is more complex because we have a big agricultural stocks in the state of Mato Grosso, right in the middle of the country, almost making the decision if they go to the Pacific, to the north, or to the south. So the good news is that they are going to have alternatives. But the bad news is that despite being a very efficient state in terms of production, in agricultural production, it's always going to be a state that's less efficient in terms of delivering compared to Illinois, which is in the banks of the Mississippi River. The system is going to develop. It's going to have a longer period of maturation, license problems, development of those ports. We have natural problems such as in Porto Velho, where we have a developed system, but it's meters below water. We are literally 3.60 meters below water. So we are supplying Cuiabá from Cuiabá because it's underwater. And so all the system of soil is underwater. It happens. And this is the development process. We have to have an infrastructure that is compatible to that, according to the big floods. All that is going to develop. In 20 years, we will see a big developed system there. Yes, in 5, well, we don't know. What is going to be the timing, which is more relevant to decision than directing something important to happen there? I agree. The trend is given. The Panama Canal is closer, but on the other hand, in the short term, if we look at the fact that there were auctions in that important area, oh, they were very aggressive. So cost to be there and to go through Southeast, this is going to be still less expensive. We're going to receive billions of investment, and the Southeast receives investment in a good pace. So the trend is happening. I don't see a immediate threat to trucks movements where we are in working. Competition in terms of ports and something that works with scale, where we need scale, and the containers, all logistics. The, to be successful, you must consolidate the loads. Today, we have ships, and to have one port against the other is not going to favor the cost Brazil. It's going to favor ships that want to decrease prices. So this is a model that has to be reorganized. Ports, terminals cannot compete one with the other because then the ships will make money. What are your views about this regulatory model proposed by the government? Is it sustainable in the long run? What issues should be addressed for the investment to be successful in railways? In terms of interests in the new figures, the operator, independent railway operators, what interests concern? What about risk allocation? How do you see these different figures today, different players today? I think that the irony of here is that theoretically you would have more ability to implement a system successfully if when you disconnect the operator or the rail operator from the way itself in mature markets. But in mature markets, railroad conceptions or concessions are from the old times. So there's an irony here. In a new market, where you have the main objective of a railroad that's going to cost 10 billion reais is to lower capital costs. You may do lots of math, but your objective is to lower capital investment that's going to be made in the future. It's reduced by risk reduction. If you deintegrate that model, that will not reduce risks. This is a challenge that the government tried to solve by saying, I'll do it, I'll sign the check, I'll give it to you. If there's no demand, here you are. Then you say, okay, but who is going to give it? Oh, it's Valec. So the problem is the balance of Valec. So we are running after a way to reduce risks, to reduce capital costs, and that will mean a reduction in the tariff and it will become more competitive. This is the portrait. That's a complex portrait. That's a knot that we have to undo. And I already see movements trying to mix the models in a first moment. I don't see a solution. I don't see that Brazil has the ability to support all that because the initial account of 110 billion invested, when you put it on paper, how much that costs to the treasury if you don't have the adequate demand, that's a relevant number. It's the like deficit of health. But there are some rail lines that will offer demand and that will be sustainable. So the private initiative won't have to solve that now. What do you like more, off or GIF? The operator or the permanent via? I'll tell you that it depends depends on the setup. If you have an operator of permanent via that works and you have a market that enables an anchor, you have a port that enables you to originate loads off, may be very interesting. If you are off and you're going to compete with two offs that are on your sides, that's complex. You will end up a model of a truck driver with higher capital but struggling just the same. So the model may not take off initially. In the long term, you may do it through clients that own the cargo, but at first, GIF seems more attractive to me. But we have to solve the problem, capital slash risks. I agree with your observation, Lutz. I think that a simple answer would see that it works on paper. The model is feasible. In practice, it's very complex to be implemented. I think you are going to have an intermediate phase until you achieve that maturity. In relation to risks for the financial market, they are the same of which the enterprise or the entrepreneurs see. I was talking to a colleague and we were talking about PPP. He went to England and he was asking the government, someone from the government who was working with PPPs, and he said, okay, but for the counterpart was the guarantee from the government. And the guy looked at him and said, I don't understand your question. The guarantee is the English government. We are far from that maturity. Obviously, the Treasury will not support such subsidies, such as it's being proposed by Valek. So the Valek risk is relevant and it concerns entrepreneurs and finance and investors in general. There's another risk related to the model, arbitrage, the relation between GIFI and FE to certain operation risks, accidents. What about blames, indemnizations? The person who is going to follow that way in terms of losses, all of those are not clear in our model. They're not clear for our risk analysis. So what's more interesting? It depends on the point of view of capital costs, as it's been said by Lutz. But both roles are interesting according to the risk return you're going to evaluate. The operator of the way is similar to what happens with transmission lines. A model is very similar to the fixed income model. It depends on the discount, and you already know what's going to be the profitability, at least in terms of relationships with FI. But FI has a role that's a bit different. It's included in the logistics chain, and for some cargo holders, it has a strategic bias. We know, and we have worked with some clients, and we perceive that within FI you have two types of clients. The one that looks at it as a business unit to render integrated logistics services, and the other one is the cargo holder that many times may say, I prefer not to look at that as an income center, but as a cost center. And then for the port models and the railway models, we should observe that because we have to meet the needs of cargo holders, but you must create competitiveness through big logistic operators. I'm not the largest specialist, I'm in finance, but Lutz may something about that if you want. Now going to the last topic. I would like you to ask Roberto, as you've said, you mentioned PPP. We know that when we look at the pipeline of projects, it is huge for roads concessions, but we know that tariff models and the interpretation of the government will not allow those projects to be pure concession. How do you see the next bids, the next auctions? PPP, the example of Tamoils, Is it there where you're going to generate value? What about that? What about the future of that? We think that a big challenge is the guarantor, the fund that guarantees that the risk levels, the PPP projects, means that we have a partner, the government, and in other municipalities it's easier to look at the risk and analyze it as a risk where you control everything compared to a risk where you have no control, a concession, you have control over the toll, for example. As it's been said before, in Brazil, we have a big country to develop infrastructure. We see that the feasibility of projects that have been approved in the past they were feasible due to the toll station. Today, it's going to be necessary to look at the project where you have to share something in terms of other incomes, other subsidies, PPPs, for example. In the state of São Paulo, we have a project of Tamoios that's going to have a sponsorship from the government in relation to worksite development. Some of our concessions face challenges where the government, or the fact that it was not well planned in the past, when you look at the reality and you observe that it's necessary to increasingly include more projects, you are facing a project where you have a tariff of 1.50 reais, and you thought of a project of 400 million reais. The project doesn't work anymore because the government has seen the growth of the city, must invest differently. It will include here projects in more sophisticated projects, and investment is 2 billion reais. So how can we finance that given that you have a risk of financing? Of course, we accept that, but the project is big. Who is going to pay for the political burden of increasing the tariff by 100%? This is very complicated. So sometimes it's necessary to start projects with the sharing of investment, of income, and resources with the government. The government will have to sponsor more projects in Brazil. That's our vision. We understand that these are projects that we like. We're going to organize some of them. We are already doing so. But these are projects that face a challenge. It's like Brazil. We're in Brazil where we do not have the British government. The British government still do not cover 100%. And our first analysis was that's the São Paulo government. It's important to highlight that, to have the credibility of the government. To make infrastructure is not simple. PPP means that technically you make the project and you cannot pay. And then you have the PPP. To make the PPP based on a dogma doesn't work. Where there is traffic, there is the private initiative. We can see that from the auctions. There were monstrous things, gargantuous things, but everybody were participating. It was very aggressive, and infrastructure has to come up. It has to be very well planned. Making infrastructure is not simple. It cannot have a political bias as it's happening. Who will give the funding? Well, it's the receivables of mature highways. So they may invest a lot, and as we've seen in ecovias, millions of legal entities that we bought, and then we developed and also fund with extension of time for new projects. If you cannot renew concessions because they are making lots of money, so those who make money as those who participate of the auctions, you have to for 360 degrees to see what has happened in other countries and to make a decision with a vision. Then you separate PPPs, where competition has to be developed. You cannot pressure all the time for low costs, low return, because it doesn't work. Today, we have so many concessions that have been working for 10 years. They have to be powerful. We have to unlock investments to maintain groups capitalized so they will invest in new highway auctions. The vision has to be broad to solve the problem. Well, questions are finished. I was able to meet our schedule. I thank you all for your presence, for your participation. Please, would you come up to wrap up? Thank you very much.
Bom, gente,
wrap up. Thank you very much for your presence. I hope this is the first of many PerfinDays, and we count on your presence for next year. Thank you.